Today in crypto. A bipartisan group of U.S. senators have called on Treasury Secretary Janet Yellen to clarify the language in the infrastructure bill signed into law by President Joe Biden around the tax reporting requirements on crypto. In a Tuesday letter, Senators Rob Portman, Mike Crapo, Pat Toomey, Mark Warner, Kirsten Sinema, and Cynthia Loomis urged Yellen to provide information or informal guidance on the definition of broker in the recently passed infrastructure law, H.R. 3684. Under the current wording, people in the crypto space including miners, software developers, transaction validators and node operators are required to report most digital asset transactions worth more than $10,000 to the Internal Revenue Service, or IRS. Continue reading on Coin Telegraph. Around the world, douchebags are getting into NFTs in a big way. Now it's true that there are thousands and thousands of legitimate artists in the growing non-fungible token space, and that precisely none of them are Paris Hilton.Continue reading on Coin Telegraph. According to former chairman of the SEC, Jay Clayton, cryptocurrencies serve a variety of functions and are tied to a range of industries, and the SEC should regulate only those industries that are related to them. Jay Clayton, the former chairman of the Securities and Exchange Commission, or SEC, was appointed to the position by ex-President Donald Trump in 2017. Clayton frequently supported Bitcoin, BTC, as a store of value throughout his time as the SEC's chairman. Jay discussed Bitcoin and how it should be controlled in the future during an appearance with CNBCs Squawk Box broadcast on Wednesday. The former SEC chair stated that he is a huge believer in crypto technology and that the benefits of its efficiency in the financial sector and tokenization are immeasurable. Clayton tweeted, "I am a huge believer in this technology. The efficiency benefits in the financial system and otherwise from tokenization are immense." Clayton's comments come after the current SEC head, Gary Gensler, recently stated that the watchdog has no intentions to ban cryptocurrency, but that Congress may do so. However, Gensler cautioned that cryptocurrency in its current state is akin to the Wild West without proper regulation. Related reading, CBDCs to coexist with cash payments. According to Fed Chairman Powell when questioned if the current chairperson is imposing too many limitations on the crypto industry, Jay responded that cryptocurrencies serve a number of purposes and are linked to a variety of industries, and the SEC should only regulate those industries. Crypto is a wide variety of products, with a wide variety of functions, and the rules of our financial system are clear and long-standing. If you are raising capital for a project, you have to register your capital raising with SEC. If you are trading securities, it has to be on a registered venue, but there are many crypto sectors like stablecoins that are not securities and outside of SEC purview. Cryptocurrencies, according to Clayton, should be allowed, but with adequate regulation. He believes the government should be reactive to people who are violating our well-defined laws but proactive in encouraging the adoption of this technology throughout our financial system. According to him, during Clayton's tenure, a Bitcoin ETF was not approved, which will now happen in 2021 under Gary Gensler. Since then, the SEC has been chastised for rejecting spot ETF applications but allowing Bitcoin futures ETFs. There is no basis for the position that investing in derivatives for an asset is acceptable for investors but not investing in the asset itself, Grayscale said to SEC Secretary Vanessa Countryman in a letter. Under the Administrative Protections Act, or APA, the SEC was accused of treating the two Bitcoin ETF proposals unequally. Related article, Why Bitcoin is the Answer to Central Bank Monetary Madness. Former Chairman of the United States Securities and Exchange Commission, SEC, Jay Clayton expressed his trust in the nascent digital currency world, saying he is a huge believer in the technology underpinning the industry. "I am a huge believer in this technology," says Jay Clayton on crypto. "The efficiency benefits in the financial system and otherwise from tokenization are immense." This comment was made while speaking in an interview with CNBC's Squawk Box, and it came as a shock to many seeing how Clayton treated the digital currency ecosystem under his tenure. The SEC, at the very tail end of his tenure as SEC chairman last December, filed a damning $1.3 billion lawsuit against Rippe for selling XRP coins as securities. The case is still ongoing. When asked about his take on the matter, Clayton refused to comment, saying the facts are before law enforcement. Clayton was appointed by former U.S. President Donald Trump in 2017 and he served until 2020, a time in which the SEC rejected many applications for a Bitcoin or crypto-focused exchange-traded fund, ETF, product. Clayton's successor, Gary Gensler, has finally approved a Bitcoin futures-linked ETF, further highlighting the likely bias Clayton has against such products. However, Clayton's perspective towards crypto seems to have broadened since joining One River Digital Asset Management as an advisor earlier this year. On the Squawk Box show, Clayton shared his thoughts on how crypto should be regulated. Crypto is a wide variety of products, with a wide variety of functions, and the rules of our financial system are clear and long-standing. If you are raising capital for a project, you have to register your capital raising with SEC. If you are trading securities, it has to be on a registered venue, but there are many crypto sectors like stablecoins that are not securities and outside of SEC purview. In all, Clayton believes digital currencies should be implemented but in a systematic approach. Bitcoin's BTC price has been in a downtrend since the $69,000 all-time high on November 10, when the labor report showed inflation pushing above 6.2% in the United States. While this news could be beneficial for non-inflationary assets, the VanEck Physical Bitcoin Exchange Traded Fund, ETF, denial by the U.S. Securities and Exchange Commission, SEC, on November 12 threw some investors off guard. While the ETF request denial was generally expected, the reasons given by the regulator may be worrisome for some investors. The U.S. SEC cited the inability to avoid market manipulation on the broader Bitcoin market due to unregulated exchanges and heavy trading volume based on Tether's USDT stablecoin. Continue reading on Coin Telegraph. Hit the like button and subscribe to the channel.